If you're on Social Security or Medicare, 5 real things are changing this month. And for once, most of them are good news. One of them could put $50 a month back in your pocket instead of hundreds. One of them explains why your bank account might get 2 deposits this month instead of 1. And one of them is a tax break most people won't notice until next spring, which is exactly why you need to hear it now. None of this is a rumor. Every number in this video comes from the Social Security Administration, the Centers for Medicare and Medicaid Services, or the IRS. Let's go through all 5, starting with the one that surprised even us. Most years, July is quiet. Benefits arrive, nothing changes, you move on with your summer. Not this year. Between a brand new Medicare program, a lingering wave of retroactive Social Security payments, a new federal tax deduction, and a quirk in the July calendar that's confusing a lot of people, there's more happening in the next few weeks than in the rest of the year combined. We'll go in order of how much money is actually at stake. Number 5 is the one most people already sort of know about. Number 1 is the one almost nobody has heard of yet, even though it could be worth more than any of the others. So stay with us. Number 5, your July payment dates shifted. Let's start with the calendar, because if you don't know this one, you might think your payment is missing when it isn't. Regular Social Security retirement, disability, and survivor benefits go out on a schedule tied to your birth date. For July 2026, that schedule looks like this. If you've been receiving benefits since before May 1997, your payment lands on Thursday, July 2nd. If your birthday falls between the 1st and the 10th, you're paid on Wednesday, July 8th. Birthdays between the 11th and the 20th are paid Wednesday, July 15th, and birthdays after the 20th are paid Wednesday, July 22nd. Here's the part that trips people up. If you receive supplemental security income, SSI, not regular Social Security, you're on a completely different calendar. SSI is normally paid on the 1st of the month, but August 1st, 2026 falls on a Saturday, and Social Security never lets a payment sit over a weekend. So the August SSI payment moves up to Friday, July 31st. That means if you receive SSI, you'll see 2 deposits in July, one on the 1st and one on the 31st, and then nothing at the start of August. This is not a bonus payment and not an error. It's the August check arriving 4 days early. If you budget month to month, mark this now, because the gap between the July 31st deposit and the next one on September 1st is longer than usual. Bottom line, nothing extra is coming, but knowing exactly when it's coming can save you a stressful phone call to the bank. Number 4. The 2.8% raise you're already getting and what's eating into it. This one technically started back in January, but most people still don't understand where the money actually went, so it belongs on this list. Social Security benefits rose 2.8% for 2026. For the average retired worker, that's about $56 more a month, pushing the typical check from just over $2,000 to roughly $2,071. For a married couple both drawing benefits, the average increase is closer to $88 a month. Here's the catch nobody sends you a letter about. Medicare Part B premiums also went up this year from $185 a month to $202.90, an increase of almost $18. That premium is deducted directly from your Social Security deposit before it ever reaches your bank account. So on paper, you got a $56 raise, but after Medicare took its share, your real increase was smaller than the headline number suggested. If your monthly deposit didn't seem to grow the way you expected this year, this is almost certainly why. It's not a mistake. It's the built-in trade-off between the cost of living adjustment and rising healthcare costs. And it happens every year to some degree. What to do? Log into your My Social Security account at ssa.gov and pull up your official 2026 benefit verification letter. It breaks out your gross benefit, your Part B deduction, and your net deposit line by line. Takes about 5 minutes, and it's the only way to know exactly what you're actually being paid. Number 3, the $6,000 Senior Tax Deduction most people haven't claimed yet. Now we're getting into real money, and this one is brand new. Starting with tax year 2025 and continuing through 2028, taxpayers age 65 or older can claim an additional deduction of up to $6,000 per person on top of the standard deduction seniors already receive. If you're married filing jointly and both spouses are 65 or older, that's up to $12,000 combined. This isn't automatic in the sense of showing up in your Social Security check. It's a deduction you claim when you file your taxes, and it can reduce or in some cases fully eliminate federal tax owed on your Social Security income. To get the full amount, your income generally needs to fall under $75,000 if you're single or $150,000 if you're married filing jointly. Above those levels, the deduction phases down gradually, and it disappears entirely for single filers around $175,000 and married couples around $250,000. Here's why this matters in July, specifically, and not just at tax time. If you have taxes withheld from your Social Security check, this new deduction may mean you're currently having too much withheld. The middle of the year is the right time to check that math with a tax professional or a free resource like the IRS's Tax Counseling for the Elderly program, because adjusting your withholding now rather than in December gives it more time to actually change what comes out of your check. What to do? Call a tax preparer, a CPA, or a free AARP Foundation tax aid site this month and ask them one direct question. Does the new $6,000 senior deduction change how much I should be withholding from Social Security for the rest of this year? It costs nothing to ask, and for some people the answer is worth real money. Number 2, retroactive payments are still going out to public sector retirees. If you or your spouse ever worked in a job that didn't pay into Social Security, many state and local government positions, teaching, some public safety jobs, this next one may be the single biggest number in this entire video. For decades, two rules called the Windfall Elimination Provision and the Government Pension Offset reduced or, in some cases, completely wiped out Social Security benefits for people who also received a pension from that kind of job. In January 2025, Congress eliminated both provisions. The Social Security Administration has since been recalculating benefits and issuing retroactive payments to make up for the years those reductions were in effect. By the middle of 2025, the agency had already sent more than 3 million retroactive payments totaling around $17 billion. That rollout is still working its way through the system in 2026. And it hasn't reached everyone yet, particularly spouses and survivors who never even applied, because they assumed the old rules meant they'd get nothing. If this applies to you, the fix is not automatic in every case, and the amounts involved for individual households have ranged anywhere from modest monthly increases to, for some long-affected retirees, thousands of dollars in back pay. What to do? If you or your spouse had a public sector pension, log into your My Social Security account and compare your current monthly benefit to what you were receiving before January 2025. If the number hasn't moved and you believe it should have, contact the Social Security Administration directly at 1-800-772-1213. If you never applied because you assumed you'd get nothing under the old rules, this is the month to actually file. Number 1, the new Medicare program that just launched. This is the one we teased at the start, and it's genuinely new. Not a rule that changed on paper, but a brand new federal program that began on July 1st, 2026. For years, Medicare Part D was legally barred from covering medications prescribed purely for weight loss. If you were prescribed a GLP-1 medication like Wegovy or Zepbound for weight management rather than diabetes, you paid the full retail price yourself, which for these drugs has often run over $1,000 a month. As of July 1st, the Centers for Medicare and Medicaid Services launched something called the Medicare GLP-1 Bridge, a temporary demonstration program running through the end of 2027. Under this program, eligible beneficiaries can access 3 specific medications: the injectable and tablet forms of Wegovy, the quick pen form of Zepbound, and a medication called Foundeo for a flat $50 monthly copay. To qualify, you generally need to be enrolled in a Medicare Part D drug plan or a Medicare Advantage plan with drug coverage, and you need to meet certain weight and health criteria. Generally, a body mass index of 30 or higher or 27 or higher with a related condition such as heart disease or prediabetes. There's an important exclusion to know about. If you already have type 2 diabetes, sleep apnea, or a liver condition called MASH, you're likely already covered under regular Part D rules and wouldn't use this bridge program at all. One thing to understand clearly: this $50 copay does not count toward your regular Part D deductible or your annual out-of-pocket cap, because the program operates outside the normal Part D payment system. It's also not compatible with Extra Help, the low-income subsidy. If you receive that assistance, it can't be applied to bridge program costs. Federal health officials estimate close to 4 million Medicare beneficiaries could be eligible for this program. That's a lot of people who, as of a few weeks ago, had no legal way to get these medications through Medicare at any price, and now have a defined, predictable monthly cost. This is a temporary demonstration program, not a permanent law, so the window to use it currently runs through December 31st, 2027, and whether anything replaces it after that is still undecided. What to do? Talk to your doctor this month about whether you meet the criteria. If you do, your provider submits a prior authorization request. You can also check your eligibility and get details directly at medicare.gov/GLP-1 Bridge or call 1-800-MEDICARE with questions. Here's a short, concrete list. You don't need to do all 5 today, but each one is worth 10 minutes of your time this month. 1. Log into your My Social Security account at ssa.gov and check your July payment date and your net deposit amount after the Part B deduction. Costs nothing, takes 5 minutes. 2. If you or your spouse had a public sector pension, compare your current benefit to your pre-2025 amount and call SSA at 1-800-772-1213 if it looks wrong or if you never applied. 3. Ask a tax preparer or a free AARP tax aid volunteer whether the new $6,000 senior deduction should change your Social Security tax withholding for the rest of this year. 4. If you take a GLP-1 medication for weight management or want to, ask your doctor this month whether you qualify for the Medicare GLP-1 Bridge Program and start the prior authorization process if so. 5. If you receive SSI, mark your calendar for the July 31st early payment and remember there's no SSI deposit at the start of August. Plan your budget around that gap now, not on August 1st. You spent decades paying into this system. You're allowed to actually understand what it's doing for you now, not just receive whatever shows up in your account and hope it's right. None of these 5 changes require a lawyer or a complicated filing. Most of them just require a phone call, a login, or a conversation with your doctor this month. Take one of these 5 steps this week. It's a small amount of effort for what could be a meaningful amount of money. If someone in your life is on Social Security or Medicare, send them this video. The GLP-1 program alone is worth 4 million people knowing about it. Next week, we're covering 3 Medicare Advantage changes taking effect this fall that could affect your premium before open enrollment even starts.